Thank you. From the deepest bottom of my heart, thanks to each and every one of you. A small milestone achieved today, 100 more coffee lovers, 100 more crypto enthusiasts just joined the wagon. I hope we push forward and now start adding zeros from now on. So today we're gonna address the market, the general broader market, go over a lot of things and end up definitely in analyzing Bitcoin and where we are heading to. So grab your cups of coffee as usual, enjoy today's episode as we dive in. We're gonna start by the dollar index and address the a red candle day on the dollar, still trading above this bottom support zone. Wicked almost didn't touch it and pushed up, but again generally we are creating or still creating those lower highs and definitely lower lows. Here we had a higher low at this current low here, but we're gonna wait to see. The trend is still kind of going downwards, and we are anticipating a reaction around this area. This fails, then the dollar will have some major momentum to the downside. We are waiting. This will dictate how the market goes, but generally, yeah, we can see on the daily and on the weekly we have a better and clearer view of the dollar trend. So this is the last standing support on the short term for the dollar, and then then we're down below the sub 100. Again, dollar is not looking good. Stock market is not looking good. S&P 500 on the weekly printed this red week. On the daily, not looking good as well, hovering over our support at the 40 or 4,000. Yeah, actually we broke it. We broke this and trying to reclaim it at the 4,105. So we're currently trading below that, 4,098. So traditional markets not looking good. Bitcoin dominance is being bullish, printing this beautiful weekly green candle on the daily. This has been created throughout yesterday and today. Majority of the Bitcoin dominance, as you can see, just like a bull rebouncing of our support at 46.9%, and then going, as we discussed earlier in Bitcoin dominance video, this has a potential to go all the way up here and retest this area, the triple resistance area, 50.89%. As Bitcoin dominance pushes up, as we know, altcoins tend to bleed against Bitcoin, and I'm gonna link a video where we discuss Bitcoin dominance in the top right corner. Make sure to watch that one so that you understand the correlation. So Bitcoin dominance is looking beautifully bullish. Bitcoin hash rate is at all-time high. This is on the weekly, and as you can see, Bitcoin hash rate is currently at 345 million terahash, and that is up 33% from last year. And that is currently trading, or it's not trading, this doesn't trade, this is a metric of the hash rate, is currently at the all-time high level. So this is very bullish. And to understand what I'm talking about, let's go to the monthly and just check the hash rate for Bitcoin. I mean, this is how high we are throughout the years. Yeah, it's clear. I think it's clear by now how adoption and how the network, how Bitcoin's performance and Bitcoin's network and power of its network. Its hash rate is climbing and printing all-time highs non-stop. Again, why are we having those conflicts in the market? The dollar's going down, S&P or traditional markets are in red, Bitcoin's dominance is pushing up, Bitcoin's hash rate is pushing up. But why? Well, we've always warned you on this channel to stay away from shitcoins, because shitcoins, in definition, they tend to lose a major amount of their value in a very short position or so short time, short margin of time. So you might be holding something that's worth $147, and in the next couple of weeks it's worth $5, $6, $6.50. Oh wait, oh, this is not the shitcoin. This is the First Republic Bank. Well, it's the same thing. Shitcoins tend to lose a lot of money. They tend to lose their value so fast, so quick that you can't even imagine. Something like 94 to 95% of their value in a matter of a couple of weeks. I mean, if you can't smell the smoke by now, people who refuse to smell the smoke, honestly, burning is what comes next. They don't deserve to burn. They just need to smell the smoke. Those are people's savings. Those are money that people trusted banks in. This is your retirement plan. This is your educational fund. This is your, I don't know, marriage saving, house savings. Those are your future. First Republic Bank is headquartered in San Francisco with 93 offices in 11 states, has just lost today alone 29% of its value, and over the past, I mean, this is the weekly, so we're talking about 2 months exactly now, has lost 94.68% of people's dreams, hopes, and trust. It was founded in 1985. It's disgusting, just like any other bank. It has a number of employees of 7,213, whom most probably are going home. That's 7,213 families. That is the bubble. That is fractionalized banking, by them being okay holding just 8.51% of people's money in reserves. Well, sadly, this is not a shitcoin. This is a bank, and this is how it's going recently. We have one after the other. They all fall. Bitcoin in yellow is decoupling from the S&P 500 or the traditional market. If you notice, Bitcoin on this occasion just rallied up because guess what? Bitcoin is one-to-one. Bitcoin is an asset you hold, you control, and no one can play around with it as long as you own custody. People start to realize that and are jumping ships. With every crash we have, this happens. People jump ship. Whoever can bail or take their money out, they are looking for safer assets or safer places to store their wealth, and this on charts is looking like, yeah, it's looking like part of that safe haven is coming towards the yellow line. I mean, this is on chart, this is today. Even stock market got affected, and usually stock market and Bitcoin trend side by side. But today, no. Today, this was affected by the banks crashing. This was affected, but each in a different orientation. This negatively and this positively. Again, where are we heading on Bitcoin? After this rally that we've witnessed today, since yesterday and today, nice pump, our ultimate destination is still the $50,000. This is something that we have charted before, we have talked about before, and this will be still our destination. And how are we getting there? I'm gonna explain to you. So, first of all, let's go back to yesterday's video. I'm gonna link it up in the top right corner. Very important one, go back and watch it. So yesterday we didn't have this beautiful green candle here, and I've adjusted this a little bit. You know, as the market moves, we need to adjust our, lines to just be on point, and this for me looked on point, but this will not affect us too much because there's a couple of things I need to add up to yesterday's video. It will affect us positively, of course, for being accurate in our trend, but as we said yesterday, this paves the way, as this is a lagging indicator confirming the past movement, right? So the two moving averages here, the 20 and 50, we're above them, and this is paving the way. But where are we heading to? And as you can see here, we did respect this, just like we were talking yesterday. Like, we respect this, we respect our way. The purple line shows us the way, but where are we heading to? So to know where we're heading to, we go back to here, to our previous cycle from 2017 stop all the way to the bottom of the bear market of 2018 and push forward, and here is our way. If you notice that here we went all the way from the top to the bottom, came back to our 0.65 Fibonacci retracement. So we wicked all the way up to our 0.65 into our golden box. So our general orientation is our golden box between 0.5 to 0.65, and that's how we got the target. Now we know the way, we need to know the target. The target would be from the top of our latest bull run or the latest all-time high to the bottom of our latest bottom of the bear market, and the top would be between the 0.5 and 0.65. The $50,000 target between 42 to 150 at the 0.5 and the $50,000 target. But now, since we have the way, we can pinpoint when. So the when would be, let's pinpoint this. Let me remove the vertical one. Let's say nothing after the 3rd of July of 2023. That would be the way, the x-axis and the y-axis. So now we can pinpoint an approximate date of us hitting those two. So if we keep on proceeding according to plan, nothing more than 3rd of July 2023, we should have hit our target. And definitely we'll come back to this and see how did we perform on this one. So on the shorter time frames, on the daily time frames, but before going to the daily time frames, yesterday is something I need to add a little again as well. On top of that, we discussed yesterday the 20 and the 50 moving averages, and here let's add the 100 and the 200 and remove the 50 and the 20 for a second. So if you notice, so let's keep them and let me show you. So far we are trading above 3 out of 4 important moving averages, right? 3 out of 4. And But this crossing confirming our previous move. Now currently we're trading above the most important of them all, which is the 200, and the second most important is clamping on top of us and currently is at $33,500. So this area, I mean, after or when we break the 100, we'll be in a very, very good position. So far we're trading between those two clamps, and at the end of the day we want this formation: white, blue, orange, red. That would be the ultimate bullish sequence. And currently we have orange, red, white, and blue. Those will move faster to the upside, and this should start to lean down until they are aligned into this particular order. So that would be the perfect formation of a full on fledged uptrend. So mark this number down, 33,300 area. Okay, and now we can move forward and discuss Bitcoin on the shorter time frames. So you want to know the targets, the short-term targets. I mean, this has been our friend, and this is everything we need to look at. It has never failed us. Mimicking the past action, doing exactly the same around our levels, and pushing to the higher band of the parallel channel. And again we have the same movement here, pushing all the way up. First target, the middle of our parallel channel, which we, to say the least, pinpoint and reacted to it to the exact dollar. So that would be target one. Target one, $30,000. Touch that. Okay, target two clearly would be the top of our previous high, which is the top of our Fibonacci retracement tool, which is taken from the previous high. And that would be at $31,000. That would be the second target, right? So break this maybe, or come back down, retest, come here, or come back from here down, retest our support now, which was a resistance, which didn't resist too much, by the way. The push was so high or so fast, so brutal that it pierced off, but it resisted us here and supported us here and resisted us here. So this, maybe we can come back down, retest this, come back up, break this, you know, trade into this triangle here, triangular formation, and when we clear this, our end target would be the top of this parallel channel. Okay, so the top of this parallel channel in a couple of days would be at around 32,529. So those are, or 33,000, depending on when we hit that. So those would be our targets on the short term: 1, 2, 3 to the upside. To the downside, 1, 2, and 3. I mean, I doubt to hit this 3, so we have this low. So this low before, but yeah. So first, let's consider this white line and this base from the parallel channel. Those would be the targets to the downside. So very clear to see, very clear to understand, and the numbers are even beautiful and clear. 30,000, 31,000, and if today, that would be 32,000. But definitely, I mean, nothing is definite, but today is maybe, who knows. I doubt that we'd hit the top today, but in a couple of days we'd be around 32 to $33,000 top of our band. So to put things into perspective, we have our previous high here, the previous weekly would be at 30,482, which is around the 30,500 was our previous weekly high. The week before, so here you can see them. This is previous week, this is the week before, the two previous weekly highs. The one before was at $31,000. So those are as well aligning by the targets we spoke earlier. 29, 30, 31, and then 32 to 33,000. If we take the Fibonacci and consider our local high here to this low here, okay, so and going sideways, then moving into the expansion levels, we'll find something interesting. So our expansion levels, let me add the 1 point, we can add here the 1.786. I want the 1.786, so 1.786, and let's color it in yellow, and then okay. So yeah, now you learned how to add levels on the Fibonacci as well along the way. So let's grab the very bottom and 1.786. Let's flip this. Let's flip the targets to the other side, put them on the right. And that would be, all right, adjusting this one, adjusting the bottom. So that would be 1.786, the 32, $300 to $400. And if we go back, that is a point of interest, the 786 target, and then in the expansion levels, the 1.786 target is an important level. Of course, all of those are important. So consequently, I want you to notice that 3,735 is the 0.123. That would be here between the last week's high and the previous one's high. So that would be a point of interest. The 1.618 would be at 31,891, around 31,900 would be a point of interest, and this would be the 32,399. If we go back here, that would be 32, yeah, around this area, 32.3, this area, which is in a couple of days, if we kept pushing up, would align by our top of our parallel channel. So keep those targets in mind. This is a very important chart which has respected us so far. I mean, yeah, I mean similarities, and here we took us only 2-3 days and we wicked. So here, like 1, 2, 3 days, maybe tomorrow, maybe the day after, who knows, but those are the levels. This is trending to the upside, and the, you know, the orientation is, as you can see, the trend is to the upside, and the trend is always your friend until it breaks. So don't get broken, don't work against the trend. Once again, thank you so much for the subscriptions and for the support. Let's multiply that by 10x, 20x, 30x, and all the way up to the hundreds of thousands. Stay safe, stay crypto. Don't forget to subscribe, hit the like button, and share this with someone you care for. I'll see you tomorrow. Bye bye.